Welcome back. Today we're diving into just one single news report, but honestly, it feels more like a strategic map.
A map. How so?
Well, it seems to lay out the future of AI infrastructure, or at least how one dominant player sees it. We're talking about Nvidia.
Ah, okay. The big one in hardware.
Exactly. And where they're putting their enormous cash reserves tells a fascinating story. It looks like they're buying way more than just, equity stakes.
Right, trying to influence things.
It seems like it. So our sources point to this massive reported investment, and it really paints a picture of a company trying to shape, maybe even control, the whole AI ecosystem,
From the silicon chip itself.
right up to the software developer's keyboard.
Yeah.
So the mission for this deep dive, let's try and quickly get our heads around the sheer scale of this investment.
Okay.
And more importantly, what does it tell us about NVIDIA's strategy, especially when it comes to AI for software development? That seems key.
Got it.
Okay, let's unpack this. Specifically, the sheer, almost unprecedented amount of money going into, well, an application layer startup.
Yeah, the focus here is this reported um, huge investment in an AI company called Poolside.
Poolside. Okay.
And the numbers being reported, mostly via Bloomberg, are pretty stunning. They really signal well, a big shift in strategic thinking.
How big are we talking?
Nvidia is reportedly looking to put in at least $500 million.
$500 million. Okay.
But get this, if Poolside manages to complete the rest of its larger funding round successfully, Nvidia's commitment could actually go up to a full $1 billion.
$1 billion from NVIDIA alone.
A billion. And just to put that into context, this potential billion from Nvidia, it's part of a much larger planned funding round for Poolside overall.
How large?
They're aiming for around $2 billion in total for this round.
Wow.
And that kind of financing implies a valuation for Poolside that's, well, it's huge. $12 billion.
$12 billion for Poolside. Okay, that is a jaw-dropping number for a startup. $1 billion potentially from just one investor. Valuing the whole thing at $12 billion. So, okay, we definitely need to define Poolside for everyone listening. What is this company?
Right. So Poolside is all about building AI models, but specifically for software development.
Ah, so AI that writes code.
Essentially, yes. They're building advanced code LLMs, large language models, trained specifically to help with complex software engineering tasks, automating parts of it.
Okay, so niche, but a very valuable niche if it works.
Hugely valuable. The idea is to speed up and maybe eventually even automate a lot of the actual coding process.
Which brings us back to that strategic question. When a company like Nvidia, totally dominant in hardware, puts potentially $1 billion into software,
Yeah.
is this really just a VC play? Like, are they hoping Poolside becomes the next giant and they get a huge return? Or is it more about ecosystem control?
Oh, I think it's definitely leaning towards control. Much more than just a standard VC return calculation.
Why do you say that?
Well, think about it. If you already dominate the hardware, the GPUs that run all this stuff,
Right.
your next logical step is to make sure you have significant influence, maybe even reliance, built into the critical applications that drive demand for your hardware.
Ah, so it's not just let's own the best software. It's more like let's make sure the best software, the stuff everyone uses, runs best on our chips.
Exactly that. You want to ensure the tools building the next generation of software, which Poolside aims to be, generate applications that need, well, Nvidia hardware.
It creates a dependency loop.
Precisely. By taking such a massive stake, Nvidia gets influence. They get insight. They help ensure Poolside's success, and by extension, future demand for their own core product.
That really does reframe it. It's not just a bet. It's strategic infrastructure building, but at the software level. And underlining that commitment, you mentioned this isn't NVIDIA's first investment in Poolside, right?
That's right. And this is where the confidence or the acceleration really shows. This isn't their first rodeo with Poolside.
When was the first time?
They actually backed the company during its Series B round. That was for $500 million in total funding for Poolside.
Okay. And when was that Series B?
Very recently. It was just last autumn, October 2024.
Wait, so less than a year ago, they put money in during the Series B last October.
Correct.
And now they're reportedly ready to come back with potentially $1 million in this next round.
Yeah, potentially doubling or even quadrupling down, depending on how you count their share of the Series B versus this potential solo commitment.
That's an incredibly fast turnaround for such a massive increase in capital. That signals something must have, I don't know, really clicked or accelerated NVIDIA's thinking on this?
I think it has to. It signals, first, a really strong belief in Poolside's tech and their market position. They must like what they've seen since October.
Makes sense.
But second, and maybe more crucially, it probably signals a sense of urgency. The AI arms race is moving so fast.
Yeah.
Speed to market for these foundational models, especially in something as critical as code generation, is everything. By pumping in this much capital, Nvidia helps Poolside build faster, build bigger, maybe scare off rivals.
And ensure their favored horse wins the race for the dominant code generation tool.
A tool that, again, will likely drive demand for Nvidia GPUs. It reinforces Poolside's stability and gives them a huge war chest.
Okay, here's where it gets really interesting, though. Why this specific area? Why AI for software development? Is that seen as the ultimate demand driver?
It's certainly one of the biggest. Think about it. Almost every company, every new application needs software development. If you can make that process faster, cheaper, more powerful with AI.
The demand for the AI and the hardware it runs on is potentially limitless.
Exactly. It's a foundational layer for future innovation. So controlling, or at least heavily influencing, the dominant tool in that space. That's a massive strategic prize.
But isn't this also incredibly risky for Nvidia? I mean, they're moving cash from their core business, selling high-margin GPUs.
Yeah, where they dominate.
Like
And pouring it into venture capital, basically. Funding a startup in the super competitive, often lower margin software world.
Yeah.
Is it partly defensive? Are they spending hardware profits just to make sure they don't lose the application layer, even if Poolside itself doesn't give a huge VC return?
That's a really sharp point. I think there's definitely a strong defensive element here. It's a calculated risk, right?
How so?
Nvidia knows even if they keep, say, 90% market share in AI training GPUs, their position isn't guaranteed forever. What happens if a really successful AI application layer emerges?
Like a dominant code generator.
Exactly. What if that tool gets optimized for or runs better on some alternative hardware? Maybe something from Intel or AMD or a custom chip.
Then NVIDIA's GPU dominance starts to erode from the top down, from the application layer.
Precisely. So by investing heavily in Poolside, they're trying to influence the development of these critical models, keep them tightly integrated with their own hardware roadmap. It's about managing that risk.
So it's not just hoping Poolside wins, it's actively shaping Poolside so that if it wins, NVIDIA also wins. That's the core idea, I think. And NVIDIA is doing this more broadly now. Our sources say they're already a, quote, prolific investor in AI startups.
Right.
But Poolside isn't an isolated bet. It looks like part of a much wider strategy to get influence across, well, several different really crucial layers of the whole AI stack.
Okay, so if Poolside represents that core software development layer, the AI models writing the code, what other layers are they targeting? You mentioned diversification. What about, say, specific industries using AI, or even the hardware competition itself?
Yeah, you can see the pattern pretty clearly if you look at other recent moves they've reportedly made or explored.
Like what?
Well, for a specific vertical application, look at Wave.
Wave, the self-driving company in the UK.
That's the one. Around the same time as the Poolside Series B investment last October, Nvidia was reportedly exploring a separate potential investment of around $500 million into Wave.
$500 million into self-driving AI. Okay.
So see the pattern. You've got Poolside for generalized code generation, writing potentially any software.
And Wave for a super specific, high-value vertical application, autonomous vehicles, covering both ends of the software spectrum almost.
Exactly. Wave is a perfect example of locking in a key vertical. Self-driving needs absolutely massive, specialized compute power.
NVIDIA specialty.
Right. So by investing heavily in a company like Wave, NVIDIA potentially secures a large long-term customer, and they get to help shape Wave's technical architecture.
Which, surprise, surprise, will probably end up being optimized for NVIDIA chips.
It makes strategic sense, but perhaps the most audacious move, the one that really screams ecosystem control,
Go on.
is what they did regarding their foundational hardware competitors, specifically Intel.
What about Intel?
Just last month, NVIDIA took a massive stake in Intel. $5 billion worth.
Hold on. $5 billion.
With a B.
$5 billion invested directly into their main long-term rival in the chip space.
Okay, that's not just hedging. That's a huge deliberate move. Investing $5 billion in your primary competitor. That seems completely counterintuitive on the surface. It does. Unless, as you said earlier, you start thinking about managing the entire ecosystem, not just winning head-to-head product battles.
So what does buying $5 billion of Intel stock actually get NVIDIA? Influence. A board seat.
Influence, definitely. The sources mentioned stated plans for future chip collaboration. This looks like financial maneuvering to shape the whole competitive field.
How does that work? Collaboration with a competitor?
Well, it seems to operate on a couple of levels. First, maybe genuine collaboration on certain things, perhaps ensuring specific chip technologies, maybe things that complement Nvidia's GPUs, like certain types of CPUs or networking chips, develop in ways that benefit Nvidia's overall system vision for the data center.
So coordinating development to avoid unhelpful fragmentation.
Could be part of it. They don't want the ecosystem to break in ways that hurt them. But the second level is probably more critical. It's defensive.
Defensive how?
By owning a stake that large, Nvidia gains, at minimum, visibility, insight, maybe even a voice, formally or informally, in Intel's future direction, especially regarding projects that might directly threaten Nvidia's core markets, like high-performance AI chips.
So it's a way to potentially influence or maybe even slow down competitive threats using the cash generated by their current market dominance.
It's certainly one interpretation. It's about using their current financial power, derived from GPU sales, to manage future competitive risk right at the hardware foundation.
Wow. Okay, so if we put these pieces together, Poolside for software models, Wave for vertical apps, Intel for the hardware base, the picture is pretty clear, isn't it?
Yeah, it seems to be.
This isn't just about selling the best graphics cards anymore.
Not by a long shot.
So the key takeaway here for you, listening, seems to be that Nvidia is really aggressively moving beyond just being a hardware company. They're becoming like an architect for the whole AI industrial complex.
That's a good way to put it.
We're seeing this consolidation of influence across at least three vital layers. That potential $1 billion into Poolside for the AI software models.
Oh, the code writers.
The $500 million being explored for Wave, representing those specific high-value AI applications.
For a vertical play.
And then the massive $5 billion stake in Intel, influencing the foundational hardware competition itself.
It really connects the dots. They're using the huge cash flow from their current hardware dominance.
Which is enormous right now.
To basically ensure that all the critical pieces of the AI future, whether it's the AI writing the code, the specific apps using the AI, or even the competing chips, are developed in ways that benefit them, either running on their hardware or at least developed with their financial influence and strategic oversight.
It's a systemic push to secure future demand and reduce uncertainty, hedging their bets across the entire value chain.
Absolutely. Which leads us to the final thought we want to leave you with today. As these tech giants, led here by Nvidia, are spending truly unprecedented sums to influence every single layer of this emerging AI supply chain.
Yeah.
What does this really aggressive, diversified, high-equity investment strategy tell us about what competition will even look like 5 years from now?
Yeah, good question.
Is success in the future going to be defined just by having the best single product, like the fastest chip? Or is the real winner going to be the company that masters this seamless integration?
You mean integrating the hardware, the software, the applications, even managing the competition, all orchestrated through these huge strategic investments?
Exactly. Is it shifting from pure product leadership to something more like deep ecosystem architecture, where owning the connections is as important as owning the core tech?
A future defined by strategic capital and ecosystem control, not just innovation alone. That's definitely something to think about.